Aluminum Company of America reported their full year 2023 results January 17th, and they were not too impressive. Full year revenue came in 15% lower than 2022 at $10.5 billion. Gross margin was just 7%, down from 18% last year, and operating margin was negative 4.5%. The bottom line came in at a loss of $651 million. Market cap for Alcoa stands at $4.9 billion. In fact, the company has reported a loss in the last 5 years, except in 2021-2022, during the run-up of aluminum prices. Net revenue has had a compound annual growth rate of almost zero for the last 5 years. Operating margins growth has been 8.5%, while net income has been contracting by 10% for the last 5 years. Despite the high prices of aluminum back in late 2021 and early 2022, mining output has been slowly dwindling. Bauxite production was just 41 million dry metric tons in 2023, down from 47.4 in 2019, contracting nearly 3%. Alumina yielded 10.91, down from 13.48, and aluminum smelting amounted to 2.11 million metric tons, down from 2.14, both contracting around 1.5% from 2019. Aluminum production did, however, see a year-over-year increase of 5%. Looking at the valuation tables, we won't be very impressed. The company is buying back company stock, and shares outstanding were lower by 1.3% year-over-year. Earnings per share were minus $3.65. Sales per share was down 14% to $59 each. Cash per share was also down 14.5% to $5.29. Book value was lower too by 10% to $32.80. The P isn't meaningful, and PEG at 0 is not that impressive. The debt ratio at 0.12, which is a reasonable valuation, as Alcoa has only 12 cents of debt for every dollar of asset. Long-term debt decreased by $70 million year-over-year, a positive sign. Debt to equity at 0.3 was slightly worse than last year, as total equity declined $700 million. Short-term liquidity ratios do seem favorable, though worsening year-over-year. The current ratio at 1.45 is good, though lower than the 5-year average of 1.56. The quick ratio came in at 0.54 and the cash ratio at 0.31. Return on assets and equity were obviously negative. Cash outflow for investing was $585 million as capital expenditures increased year-over-year. Financing cash flow was $57 million, largely due to the firm halting share repurchases last year. Note that the change in shares outstanding reported earlier was that we used the average shares outstanding rather than the actual. Free cash flow to the firm was positive at $1 billion, though lower year-over-year by 29%. Alcoa paid a dividend of 40 cents last year, which yields 1.5%, growing at 1.3%. In reality, the dividend remained the same year-over-year, just that there were less shares outstanding. Dividends paid by the company amount to $72 million, or about 7.6 of current cash. We don't think they will halt dividend payments, but are not likely to continue purchasing shares. Enterprise value of Aluminum Company of America is $5.6 billion, which gives it a multiple of 0.53 times revenue and 5.3 times free cash flow. Alcoa's guidance for the next year seems slightly better, all things considered. Aluminum production is expected to be lowered by 1 million dry metric tons, while aluminum smelting will slightly increase to 2.2 or 2.3 MDMT. Alumina shipments will increase to 12.8 million dry metric tons, but aluminum shipments will remain the same as 2023. As for costs, energy and raw materials are expected to be lower, though other costs such as the curtailment of Kwinana Alumina Refinery in Western Australia are expected to offset these input prices. Key takeaways from the earnings report on the pro side are positive free cash flow. The company still pays a dividend and the liquidity position seems good. Also, aluminum prices appear to be consolidating at these prices. On the con side, Alcoa is losing money with gross profit margins at just 7%. The firm is subject to the economy, as aluminum is an industrial metal used in aircraft, automobiles, and electronics, just to name a few. Energy prices are also a factor, as mining and smelting is very energy intensive. We rate this company somewhere between a sell and a neutral. Unless aluminum prices increase, we don't see Alcoa's share price moving higher. If you own the stock, your capital might be better used elsewhere. We of course have no exposure to this company. Like and subscribe.